In a world where the whispers of financial instability grow louder by the day, voices like those of Michael Burry, Steve Eisman, and the legendary market sage Robert Kiyosaki have emerged as beacons of caution. Amidst the clamor of media narratives, one truth remains. The markets are facing turbulent times, and the likelihood of a downturn cannot be ignored. And today, we turn our attention to the insights of none other than Robert Kiyosaki. Even if you're not intimately familiar with his name, chances are you've encountered his profound influence through his timeless masterpiece, Rich Dad, Poor Dad. But what's the latest from Kiyosaki's perspective? What wisdom does he offer to navigate these uncertain waters? The answer lies in his bold recommendation: invest in these distinct assets. In this video, we will delve into these assets, decipher Kiyosaki's reasoning behind them, and unveil his strategies for turning potential financial turmoil into a pathway to prosperity. Recently, Robert Kiyosaki took to Twitter to share his candid perspective, posting, "Soft landing, hard landing, or crash landing? I say crash landing. I hope I'm wrong, yet that's what I believe. Corruption is high, and leaders corrupt. Buy gold, silver, Bitcoin, still the best insurance against corruption and incompetence." But what specific corruption and incompetence is Kiyosaki alluding to? The answer lies in a narrative of market manipulation, where monopolistic forces appear to channel wealth into the coffers of a privileged few, the top 1% who seemingly wield unmatched power to orchestrate the financial system. In the aftermath, what trickles down to the masses often appears as mere paper bills, or in Kiyosaki's candid characterization, toilet paper. This analogy underscores the concept of Gresham's law, which posits that bad money drives out good money. In today's context, the bad money is none other than the US dollar, a currency that Kiyosaki playfully dubs bad bunny, casting light on the erosion of its value. In a system where value becomes elusive, the need for a hedge against potential downturns becomes paramount. This is where Kiyosaki's resounding endorsement of assets like gold, silver, and the transformative cryptocurrency, Bitcoin, gains its strength. In his view, these assets hold the key to insulating oneself from the corrosive impact of corruption and safeguarding against the uncertainties that the market's turbulent currents may usher in. Now, let's delve into the assets that Robert Kiyosaki is championing as the safeguard against potential financial turbulence. These assets have captured his attention due to their inherent value and the essential role they play in times of uncertainty. First on this triumphant trio is none other than gold. Kiyosaki firmly believes in the intrinsic value that gold brings to the table. Unlike mere fiat currencies that derive their value from the trust and backing of a central authority, gold's value is tangible and enduring. Its worth transcends the fluctuations of markets and financial systems. Gold has historically stood as a stalwart of stability, a shining beacon even in the face of economic collapse. Its scarcity further cements its value, ensuring that it remains a finite resource with intrinsic worth that resists depreciation over time. Silver, the second gem in this constellation, shines with a similar allure. Kiyosaki's faith in silver is grounded in the same principle of intrinsic value. Just like its lustrous sibling, silver's worth extends beyond market fluctuations and the tides of change that rock the financial world. The scarcity of silver also contributes to its status as a valuable asset that stands resilient against the corrosive effects of time. But there's more to the story. Both gold and silver have demonstrated their capacity to act as robust hedges against the erosive forces of inflation. Inflation, the insidious force that erodes the purchasing power of money, can swiftly undermine the value of savings. Yet, gold and silver have a proven track record of counteracting this decline. During periods of inflation, these precious metals have a tendency to appreciate in value, essentially acting as a fortress for your wealth amid the stormy seas of economic uncertainty. For an illustrative example, cast your mind back to the early 1970s when the United States was buffeted by a tempest of inflation. The value of the dollar experienced a precipitous fall during this time. Yet amidst this turmoil, the value of gold soared. This isn't mere coincidence. It's a testament to the intrinsic nature of gold as a hedge against inflation, a beacon of value that remains steadfast when paper money falters. Now, Let's dispel any misconceptions about Robert Kiyosaki's approach. He's no relic of the past, clinging stubbornly to outdated notions. Quite the opposite, Kiyosaki's approach is innovative and analytically driven, a strategy that has yielded benefits for both him and his followers in an ever-evolving market landscape. Enter Bitcoin, the digital behemoth that needs no introduction. Kiyosaki's perspective extends to this modern wonder as well. He recognizes the potential in Bitcoin to serve as an effective hedge against inflation, an asset that could potentially emerge as a new global currency. What sets Bitcoin apart is its decentralized nature, free from the control of any government or central bank. This unique feature positions it as a potential safe haven for investors wary of the twists and turns that the global financial system may take. But there's more. Bitcoin's scarcity is its trump card. The total number of Bitcoins will never exceed 21 million, a built-in safeguard against diminishing value. For those who need a refresher, Bitcoin's future trajectory recently received a boost from the world's largest investment firm, BlackRock, pouring billions into this digital currency. Additionally, a Bitcoin halving event is set to unfold, slashing the supply in half. This event is widely expected to drive up the price of Bitcoin. If you're still skeptical, take note that none other than ARK ETF CEO, Cathie Wood, has projected that Bitcoin's value could skyrocket to a staggering $1 million by 2030. As of now, each Bitcoin hovers around $30,000. You do the math, the potential gains are extraordinary. However, it's important to note that Bitcoin, as a relatively new asset, carries a degree of uncertainty. Security concerns loom, as do the inherent risks associated with its value fluctuation. If these uncertainties concern you, traditional assets like gold and silver might align better with your risk appetite. Now, here's the golden question. How can you get your foot in the door? Investing in silver, gold, or Bitcoin can be done in various ways. You could opt for physical coins or bars, explore exchange-traded funds, ETFs, that mirror asset prices, or even directly purchase Bitcoin via cryptocurrency exchanges. But before diving in, thorough research is paramount. Recent scandals, such as the FTX incident, emphasize the importance of due diligence. And let's not underestimate the power of even a small investment. Whether you have $25 or $2,500, every contribution counts. The key is mindset. It's about turning those initial dollars into 100 over time, rather than letting them languish in US dollars, losing their value and purchasing power. Remember, every small step matters, and it's never too late to start your journey towards a more secure financial future. Kiyosaki's recommendation isn't merely about assets. It's about value that transcends the whims of the financial system. He emphasizes the intrinsic value that silver, gold, and Bitcoin inherently possess. They aren't just numbers on a screen. They represent tangible wealth even if the intricate web of finance were to unravel. But what sets these assets apart is their scarcity, a concept that Kiyosaki appreciates and advocates for. In a world where economic turbulence and inflation can erode purchasing power, silver, gold, and Bitcoin stand tall as stalwart guardians against such woes. Their value is likely to hold steady, if not rise, in the face of these challenges. Now, let's acknowledge the elephant in the room: risk. Indeed, investing in these assets comes with potential downsides. Their value can fluctuate, leading to losses, and selling them might not always be straightforward. Yet, as with any venture, risk often dances hand in hand with reward. The potential gains can be substantial, even life-changing. Thank you for joining us on Stock Marketpedia, your go-to channel for all things related to the stock market and investing. We hope you found today's video insightful and empowering. Remember, we're here to provide you with regular updates and valuable content, so make sure to hit that subscribe button and turn on notifications. By doing so, you'll never miss out on the latest market trends, investment strategies, and expert tips that can help you achieve your financial goals. We value your feedback and input, so please leave your thoughts and suggestions in the comments section below. Is there a specific topic or stock you'd like us to cover in our future videos? Let us know, and we'll make it happen. Thank you once again for watching, and we look forward to seeing you in our next video. Keep honing your financial acumen, and remember, we're here to support you every step of the way on your journey to financial success. Stay tuned to Stock Marketpedia, where the world of stocks comes alive.